morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, July 24th. Well, we had a nice large gap down at the opening. This is all part of Europe. Markets were razzled on Spanish yields yesterday morning. Early, they were rising. Europe is not going away anytime soon, that's for sure. We entered the week with market divergence, small caps lagging, transportation sector lagging. We have the bank sector lagging and the market rallying at one point. And that's going to eventually catch up to the markets. And we have a nice big gap lower. We had a gap lower on Friday, and we had a large gap yesterday. And we're back into the middle of this band now. We had this consolidation for the last 7 to 10 days. And as you see here, we had this rising wedge, and we broke lower. Lots of divergence has formed. A lot of market groups and sectors that actually lead are lagging now. And this is something that's really concerning today, and really to look onto for the weeks to come. If you recall, last year this time we had a massive sell-off. That doesn't mean that it can happen, but if history does repeats itself, then it's something to look out for. That I can tell you. Lots of things are going on internally that I don't like to see. A lot of warning signs. I keep saying that. Doesn't mean you can't play to the long side. Case in point from yesterday. Yesterday, activity-wise, very, very low, especially when you have a large gap lower. And if you didn't come into the market short, it's very hard to get short in this area. And you're probably looking at a market long sometime. But even then, with a slow grind higher, and then most of your volume comes in at the end of the day to square shorts off or cover shorts and what have you, is a very difficult type of environment to trade. And I always say, when in doubt, cash is a position, and it really is. So no need to have to trade every single day if things aren't lined up for you. So that's something just really to make a comment on. Okay, so I've looked at about 500-600 charts last night, and I really haven't seen anything fantastic. That tells me that market's at an inflection point. So we're either going to break out of this area of resistance, or we're going to start breaking down lower. And that's something that we don't know yet which way we're going to go. Market, if anything, is going to tell us that it looks like we might be headed lower. But when you have these down days like this, I would not be surprised that we rally and kind of grind higher on low volume for a couple of days. Maybe get back up into this area here and then start another leg lower. So that's something that we're going to look at. I'll explain that to you in the charts. And I want to get into, speaking of the charts, and I want to get into some of these indicators. And this is very important. This is what keeps us on our toes. VIX. VIX broke out of this bullish falling wedge pattern. And at the opening, tons of fear. And as you can see here, then actually market subsided, and we have a black candle here. Now, in the black candle, that tells us that we had that lack of momentum to the upside. But if we do have a bullish falling wedge or a bull flag, if however you want to look at it, market price actually tends to back test the upper trend line and then have another leg. So that's why I say it wouldn't surprise me if we move gradually higher, maybe today, tomorrow, and to get back into this area here, which would be this 20-day, and then we start to rally and then really take out this candle. Once we take out this candle's high, that's a confirmed buy signal for the VIX, which would be a confirmed sell signal for the markets. And as you can see here, here's the S&P, the line chart, with double top here. So it's a perfect area here to actually look for this area to get long. Now, if you haven't hedged, like I mentioned last Thursday, or look to get short the market, watch the VIX here. And if this VIX could get back down to this area and actually start making a bullish U-turn, a reversal candle, that's when you want to look to start buying some puts. And that's something that you might want to really consider. Okay, as you can see here, stochastic starting to roll up here. So this is nonetheless a bullish configuration. So we want to keep an eye on that and watch closely what's happening. Let's take a look at China. I'm sorry, China. I apologize. Shanghai. Very, very disturbing chart here. We are now at a double bottom. Okay, we could rally and bounce back again like we did here. But as I mentioned last week, we said, wow, it's nice and encouraging that we bounced off. All it is a bull flag, and look what happened. We hit the 20-day moving average, and we roll right back again. Now, speaking of China, And I keep mentioning the China trade. We're going to be putting together a nice China trade. The problem is right now all eyes are on Europe, so we're just keeping a close watch of what happens until they start focusing on China. China came out with their flash PMI, 49.5, slightly better, but below the 50. So we're still showing contraction. And that's, again, not good if China is a big buyer of our commodities. And that's why a lot of these the commodities started to roll over. Copper, speaking of that, this is definitely not good. You don't want to see this. And as you can see here, we topped here. And look at this is copper relative strength to the S&P. We started to roll, and so we're doing the same thing here. So this is stochastics here, lower high from here. So this is something that's very concerning. And I keep saying these are all of the cracks that we keep seeing. And we say, okay, well, this is not good if we're up at the 1370 area in the S&P. Okay, now let's get into our indicators. The trusty McClellan oscillator, down negative 28. That means, guys, that we can move much lower. Okay, we're not oversold in the very least at all. So we could still move lower from here. Okay, so this is what this indicator is telling me, that if we do have a sell-off, the sell-off has plenty of legs to the downside. Okay, S&P above the 50-day moving average, still here at very lofty levels. Okay, so we still need a little bit of unwinding. That gives us, again, tells me plenty of room to the downside. 200, stocks above the 200-day moving average, plenty of room to the downside. Okay, so now that's telling me that that we have a lot of room to the downside if, in fact, that were to happen. Now, this is a very good indicator. I mentioned this to you. This is the New York Stock Exchange Summation Index. This has a 5-3, a fast stochastic. And it's on a weekly chart. So this just happened. We look at them on Mondays, and then we look at them on the weekend. And as you can see here, this generated a sell signal, very similar to here. But look what happened. Look, if you look back in December 2012, look at the strength here, and look at where we are here. Okay, we barely even 3/4 of the move higher. Now we got a sell signal here. All right, and here's the S&P weekly chart. So very interesting chart, and this is something I would like to really have caution here. All right, now let's take a look at the U.S. dollar. As you know, the dollar is king here. And what I drew in here, I drew in this other bull flag. As you can see here, this nice bull flag run up. We ran up to the double top. We sold off back into 20, and now we're starting to break the double top here. So this is something that is concerning, again. And the next breakout high would be 88. And if that were to happen, then you would see a really major sell-off in the S&P. Okay, guys, and that's the daily chart. I'd watch that on a consistent basis during the day if you're day trading. And if you are swing or you're a long-term investor, I would definitely be looking at what the dollar is doing. Okay, now let's get into our market charts here. All right, now we have our two areas. As you can see here, we have our lower high. Didn't even quite make that area up here, but 76.4% I mentioned. I put that Fibonacci retracement. Watch that area. Didn't even get up there. We do have this horizontal area here, and now we've rallied back to the lower end of this rising wedge pattern. We did break the 20, and now we're back above it barely, and we're still above the 50 and 20. So it's still constructive. I mean, I wouldn't say really technical damage, but it would not surprise me if we rally again back up to this area here, this 1350, 1355, 1360 area, and then start to sell off again and really break that rising wedge. Now, this bearish pattern will not trigger until it breaks the lower end of this rising wedge pattern, okay, this lower trend line. So something really to keep an eye on here. And spiders, S&P, I just like to look at the volume here. Now, we did gap lower, and we recovered most of the day again, but the spiders are now at the 20-day moving average, above the 50 and above the 200. And one comment I wanted to make is that earnings season right now, it's been, if you beat earnings, you get rewarded, and if you're not, they're getting decimated. So it's really a 50-50 deal here. When a good market comes in and people are, let's say a good company comes out and they're in line or they guide a little bit lower and they sell them and then they usually buy them back if you have a good healthy market. That's not happening here. What's happening is that if you missed, your stock got destroyed, and if you beat, your stock's on the way up. So just again, it's been a 50-50 iffy part. I wanted to show you here on the spot. It's the same thing as the S&P chart here. If you look at it, just have a lower high here from here, So this is something that really want to keep an eye on. I look at this every night. IWMs, which is the Russell 2000 gauge, is a good barometer of risk. Look at this chart just really getting destroyed. Lower high, can't break this area here. I have this on the arrows, and now we're sitting on the 20 and 50-day moving average. We pierced it. If they break this area here and look at the MACDs, just really starting to curl over here, okay? We have momentum really waning, and this is not good. So maybe they bounce them into this area, fill the gap, and then really sell off. Okay, so this is something that we're going to be watching in the next few days. Now, this is really concerning. Transportation sector broke the 200-day, 20, 50, and 200. If this leader is the leader in the sector, this is really telling us caution, caution, red flag. This is a very, very disturbing chart if you're a bull. If you like to short, then I'd say that this is something you might be looking to get excited about. But all our indicators rolling over, very, very disturbing chart. So this is really telling me that we have some major issues in the marketplace. Okay, big cap tech held up a little bit better. We got Apple coming out in earnings, so be interested to see what Apple says. I mean, they usually beat, but you never know. God forbid if there is a surprise, Qs would get decimated. And last but not least, our diamonds, lower high as usual. Now we're sitting on the 50 and above the 200, below the 20, so we're sandwiched between these moving averages. Be interesting to see what happens in the coming days. But again, guys, use caution. I would look to trade the best setups, 2, 3, 4 trades if you can get it. We're in the doldrums of the summer. No reason that you don't need to constantly be active in the marketplace if the marketplace does not provide that activity for you, okay? Cash is a position. Keep your stops tight, and we'll talk to you tomorrow. Take care and have a great day, everybody.